Welcome to BPM's IPO Readiness Roadmap, a series of conversations with our leaders who know what it takes to lead a company to go public or determine whether another option may be the right route for them. I'm John Weems, Head of Business Development with BPM, a top 50 US accounting and advisory firm. Our expert today is Transaction Advisory Services leader and partner, Craig Hamm, also works closely in our private equity services group. Craig's background experience includes a stint at international powerhouse PwC, so we're thankful to have him at BPM. Craig also happens to be the Ricky Bobby of skiing. He wants to go fast. He knows what it means to fly down a mountain. Craig, with that in mind, I know sometimes you encounter many zealous entrepreneurs and business owners who are racing to whatever their next is, their next round of capital, racing to an IPO, any kind of an exit. Talk a little bit about how you maybe enter the equation, pause for a moment, and help them understand what the best option may be for them.
What I try to tell clients is what I tell my 9-year-old son. Going fast and straight is fun, but sooner or later you need to kind of pull plant and turn and take your time and do it right. So we often see our clients just go full steam ahead. That's either with a fundraise, an outright sale. The current thing is, they want to go public. Now they want to do a SPAC. And so we tell our clients, these are all great alternatives, but they go full steam ahead without really having a roadmap in place to understand what does it really entail. We have a client situation right now where the SPAC is a new thing. And they were starting to realize, well, there's SEC guidelines that are needed and timelines. Before you know it, the clients are hiring, 3 or 4 interim CFOs, controllers, people from our firm, people from my group, they kind of help with the transaction. So we like to tell our clients, just pause. There's multiple ways to do what you want to do, but it's just pause and kind of find out what is the right solution for you.
And let's talk a little bit. I know we have a range of listeners from people who've been through multiple exits to perhaps those who are a little bit newer. Talk a little bit about some of the basics, Craig. When someone's raising a round or getting ready, what are some of the assessments and tools that you help provide as they look at their options?
I sense in the marketplace these clients may not know anything different, right? They may not know that there's bank financing. They may not know there's, minority, they can sell a minority portion of the business to private equity or a majority. And so a lot of our client base just goes IPO, 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 IPO. That's what they know. And I think that's just because that's what they hear in the marketplace. But now they're hearing SPAC, 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 SPAC. And so now that's kind of like the thing that clients are trying to gear up for. Regardless of the route you want to take, there's certain milestones and you got to be ready. And so what we designed is a IPO SPAC readiness assessment. It's very similar to like sell-side M&A, where we do a sell-side quality of earnings report, or we help with exit planning, where we tell a client, okay, if you want to reach out to private equity, here's what it needs to look like, and here's what you need to do. With the IPO or the SPAC readiness, it's, okay, here's what's going to be expected from investors, here's what the SEC is going to expect, and here's what we need you to do to get ready. And we design a program that kind of covers 10 areas of expertise that our firm provides. And the goal is really just to get an understanding from the client, where are you on this IPO readiness? And so we kind of help clients just really get a framework of what it really takes and how much it's going to cost and are you ready? And oftentimes we see our clients say, well, Craig, I really appreciate what you've done for us, but maybe an IPO is not the right move or the right exit for us. Maybe it's something different. It's like, exactly. That's what this program is designed to do, is to help clients understand that at any given point in time, of whatever it's a capital raise, IPO, SPAC, there's points in time where there's a reflection point for our clients to take a step back and say, I don't know why I want to do an IPO. Now I know what it entails. That's not for me.
You've shared that you've worked with clients in the past who already had invested massive sums and then later found out they weren't ready. Can you talk a little bit about how, by entering a little bit early in the process, you're able to not only determine options, connect with additional capital, but save some of those costs that could incur over the years?
Yeah, we have a client where they wanted to raise money to expand private schools and more locations. And they thought IPO, IPO, IPO. And they already spent money on the technical accounting. They already spent money on an outsourced CFO. They're looking to hire a full-time CFO. And they're starting to beef up the team, which is good. Don't get me wrong, it's all good. I mean, regardless of what your exit is, you got to build up your accounting and finance team as well as the other infrastructure. But then as we kind of got to know them better and kind of walk through kind of where they are, we realized, look, you just need the basic of blocking and tackling first. You need a controller first. You don't need an SEC reporting person. And as we go through this, like what's wrong with just getting bank debt? Or what's wrong with getting a minority investor? There's private equity firms already in your space when I'm speaking to the client that may want to buy you outright or may want to help you grow with growth equity. And so we're able to kind of convince the client that there's other options. We don't need to spend all this money on people yet. We could stop and just do enough to get a transaction. Then people, if you want to go IPO down the road 2 or 3 years later, then make the investments. But there's investments you can do now, but there's investments you can delay. And a lot of these investments, we're able to convince the client, you could delay until you really know you want to go public. But right now, you don't need to. So we're able to reduce the spend on their part, and it also just made it easier for them.
So Greg, you've mentioned the private equity route a little bit. I know you have numerous calls every single week with different size private equity firms. Talk to us a little bit about trends and what you're seeing in terms of what they are looking for. And if I am a business owner or entrepreneur who wants to maintain some control, versus exit, what are some of my range of options there?
We see a lot on the client side going back to, I want to go public. Okay, if that's not an option, I want to do a SPAC. But requires a lot of same things. On the private equity side, we're definitely seeing funds who usually do larger deals kind of coming down the food chain for smaller transactions because they just got to put money to work. And we're definitely seeing they're still overbidding for assets. And like I said, private equity firms are kind of stepping down into deal size that they're kind of outside their core, which is great for our clients, right? So we have a lot of clients who are in the middle market, lower middle market, who are looking for an exit. And with the right investment banker, they can find an acquirer who probably would have not looked at them 3 or 4 years ago, but now they will. So we definitely think there's still enough money in the system and appetite for transactions that bigger firms that you would never expect to look at smaller deals are looking at smaller deals now.
Greg, talk to us a little about some of the trends you're seeing in the lower middle market.
We're seeing our client base in lower middle market, a lot of these entrepreneur-led businesses, baby boomer generation, it seems everybody wants to sell. We saw a big uptick in companies want to sell before the election, worried about taxes. We're starting to see that a little again right now. The interesting part about these businesses is, the entrepreneur, they've done it all for their whole life. But doing a transaction is fairly new to most of these people who've owned their businesses for multiple years and generations. So M&A is new to them. And even though the private equity firms are stepping down and kind of looking at some of these smaller deals, their level of sophistication isn't. And so their needs, their wants, what they need to do to look at the transaction, to assess the company, hasn't changed. And so we find ourselves really bridging that gap between the sophistication of the data needed for a private equity firm to look at a transaction and make a decision on a transaction is a big gap between what these clients have available to provide. So we find ourselves getting these clients a little bit more buttoned up, more ready, so we could kind of match those two and help grease the skids a little bit to get a transaction accomplished. A banker is going to do the same thing, but an investment banker is going to kind of help tell that story, but we're going to kind of come in as a CPA firm and just, tell the story with financials. What we do for these smaller businesses, so we call it an LOI readiness model. It's kind of like a quality of earnings type model, but just a lot less, but it's enough for a buyer or a private equity firm who's got, the sophistication to understand the business quickly. We've had a situation where one of our clients was sending their financials to a large private equity firm, and the offer was a lot lower than expected. But once we caught up to him and able to explain that most of his revenue is recurring, we increased the purchase price. So it really just comes down to helping these smaller businesses just tell the right story. And that's with the M&A attorney, that's us, that's the investment banker, all of us. And the entrepreneur just needs to, understand that regardless of what you're going to do, you still got to prepare and you still got to spend resources to get a successful transaction completed.
Thank you, Craig. One last question. You mentioned tax implications for businesses and the, the timing there. Let's talk a little bit about the individual business owner or executive. While this isn't necessarily your realm, just talk a little bit about how BPM may work, in the transaction phases to do what can be best for the individual executive.
Yeah, we work a lot with a lot of wealth advisors on this topic as well, and so we'll bring in our individual tax partners to kind of talk about the personal tax aspects of a transaction, and then our M&A tax department will always get involved and kind of figure out the best way to structure the transaction to minimize taxes for for our client base. It doesn't have to be at the end; it could be upfront. I mean, the more prepared that our clients can be and understand what the tax ramifications are for how they want to structure the transaction, the better.
Excellent. Well, Craig, thank you very much for your time today. I invite our listeners to connect with Craig on LinkedIn. Please follow BPM's YouTube channel. Stay tuned for upcoming episodes, and we are always happy to answer your questions along the way. Thank you.